Hello and welcome to another episode of Nothing Ventured with me, Arish Shah. Today in the studio with me, I have DDan Pandeni Idhenga. Dan is the co-founder of the London Venture Capital Network, arguably one of the fastest growing venture communities in the UK. Dan's journey stretches from Namibia to New York to London, with experiences at JP Morgan, AIG, and several startups, including Confirmed, a successful health tech exit. At the London Venture Capital Network, he's building bridges between aspiring VCs, seasoned investors, and ambitious founders. In today's episode, we talk about how access to the VC ecosystem remains opaque, how to scale an events business whilst preserving the magic, how starting with skepticism led to him building an 850-strong WhatsApp community for VC in Namibia.
I just pushed for it. This has to be a thing.
Educating the next generation of venture professionals.
Our goal is access to VC. And one of the groups that's interested in VC is students.
And how you may want to get into VC, but doing the London Venture Capital Network Fellowship might just give you the harsh reality of venture.
A lot of people get a harsh reality check, and VC might not be what they expect.
The three archetypes of venture: the researcher or analyst, the community builder, and the investor.
There are three main archetypes that work in VC.
And whether the venture model in the UK is broken.
The venture model is broken, at least in the UK.
And how Dan is building the London Venture Capital Network with a culture of good vibes.
We just have a great time, bring together the best people, have huge impact.
Let's get straight into it. Hey guys, whilst I've got you here for a second, just thought I'd reintroduce myself. My name's Arish. I'm the host of Nothing Ventured, the podcast where I talk to the people behind the stories that make the venture ecosystem go round. I'm also the founder of Emerge One, a consultancy providing fractional CFO support to venture-backed tech startups from seed to Series B and beyond. If you enjoy the podcast, I would really appreciate it if you could like, rate, comment, subscribe wherever it is that you listen, whether that's YouTube, Spotify, or Apple. It really helps with our reach. And of course, if you want to get in touch, either about a potential guest or anything else you want to talk to me about regarding the podcast or anything else, do reach out to me on LinkedIn or Twitter. I'm always up for a conversation. Right, let's get back into it. Dan, really great to have you in the studio with me. Thank you so much for joining. Let's talk about the kind of evolution of the London Venture Capital Network, right? So you moved from a finance background and kind of early VC roles into building LVCN, London Venture Capital Network. So why leave a traditional kind of venture background to start a community-based business? And can you talk us through kind of what the core vision is for LVCN and how big can it realistically get without losing its magic? Because, you and I have talked about this. How do you scale without compromising quality, which tends to be, I think, anecdotally, what you can see with a lot of these sort of events-based businesses?
Yeah, some great questions. Number one, basically, the reason we started LVCN is because I was here in London. I didn't know a single person.
Yeah.
I was coming from the US. It was COVID, and then I was studying in university, my master's degree. But basically, I realized that there's no really easy way to get access to the VC ecosystem. There's plenty of events, but none at the level that I was trying to promote or to attend. And so we started putting events together that, encouraged access to VC. I have a fantastic co-founder that I work with, and together we've done incredible things.
That's Adam?
Adam, yes.
Yeah.
So we've done incredible stuff. And why did I move to a community-based business? It wasn't necessarily what I had thought I would end up doing, right? I was working in a fintech VC looking at UK Middle East fintech, and it was quite exciting. But at a certain point, my hobby of organizing these events became too big. It became like an interesting opportunity. So I thought, let me try this out.
Yeah, it's either a distraction or something to pursue.
Yeah, and I thought, I spoke to a lot of advisors, mentors, and they said, why not try it while you're younger? Why wait until, you're too comfortable in your job and you don't want to take these kinds of risks? Now's the time to try something different, including one of the partners at where I was working at. Yeah. So I took that advice on board, and we just tried our best. And to this point, we've grown, and people seem to appreciate what we're trying. we have a lot of fun.
What does the end state look like for you? Where does it go? What's the vision?
So we want to have the largest community of VCs globally. And the reason is we can have more impact the bigger we are. But at the same time, as you mentioned, how do we maintain the magic? And it's not necessarily something that has a straightforward answer. We're going to be working on preserving the magic over time, right? I spoke to one of our VC partners who's based in Singapore, and she also came up through, doing events with 3,000 attendees on an annual basis for 10 years.
Yeah.
And
by, like, we've had Alex Thiemer on the podcast, the founder of SaaStock. Like they went from, I think 10 years of now running SaaStock to now he's created a fund back future.
Exactly.
And like so many things come out of building a community that, you may not anticipate. Like you can't necessarily draw a direct line. But it's a great kind of base level to get things going, because you can see what people are interested in, what are the themes, what are the issues that people want to be involved in, right? So it gives you the opportunity to explore that, but equally you can run the risk of kind of spreading yourself too thin, right? So how do you tackle that, especially because, and again, like giving away some inside knowledge here, right? So apologies, but you are predominantly what's the word I'm looking for? Volunteer supported, right? Like, I mean, a lot of the staff, if I can put it that way, at LVCN are part of the King's College Alumni Network or currently students. And obviously at initial stages, that's great, but like that in itself can be quite difficult to scale, right? Especially as people are moving around, availability, et cetera, and maybe even focusing on their exams. Who knows? Don't know what studying is like these days, but I presume that's still part and parcel of the thing. So yeah, so how do you kind of manage all that, keep the quality, grow all of this stuff all together? Like I think it's, and by the way, I think you've done a phenomenal job, you and Adam, to date, building LVCN into what it is. But yeah, like it feels like that can be quite, that preservation of the magic, as you call it, plus scaling, plus kind of making sure you stay true to kind of your core beliefs, I guess, as a community. All of those things start coming under different types of tensions and pressures, right? The more you scale.
Yeah, definitely. I think, initially we were volunteer led. So everyone kind of volunteered and put things together. But over time, we've been able to establish a foundation. Mm-hmm. So, for example, we were able to bring on some employees that, led our executive VC fellowship.
Yep.
Or sometimes we get really great speakers that we pay because we want a certain level of quality in our events. At the same time, in terms of preserving the magic, I think it has a lot to do with culture. So we need to build a culture that preserves that magic. Is that something we've succeeded in? I'm not sure. We'll see over time, right? It's very tough to predict, but I'm fairly confident that we've built structures that allow us to replicate some of our success in the past. Ultimately, I think having the founders there to provide guidance is helpful, right? Because we have a certain sense of what makes our events special, and that secret sauce is very valuable, I think.
Have you figured out what the secret sauce is?
Or
as in, are you getting closer to figuring out what the secret? Because like presumably, each event will inform more and more and more until you kind of hone down onto that one special something. Like, do you think it is the guest? Do you think, the speaker? Do you think it is the audience? Do you think it's the venue, location, like the format? What do you think works?
Yeah,
is it all of the above?
we are constantly experimenting. So some of our events are very small. Some are huge conferences. Some are fancy black tie events, and I think the common thread among our events is high quality attendees. So somehow we're able to get these high quality attendees in the room consistently. And so how do we keep doing that into the future? We just have to keep delivering excellence, right? Excellent speaking topics, excellent people in the room, and provide the right incentives. So for example, last year we had Paul Taylor, co-founder of Thought Machine, at our Winter Ball. And that was really cool because I think it serves as a testament to our progress. initially when we started, we did not have speakers like that, right? We just had a very scrappy event. I mean, you probably remember the first event. It was very scrappy, and but I think everyone just enjoyed the atmosphere and the vibe we were able to create.
I mean, the reality is, like, when you're doing events, the first event is always going to be a learning experience, right? Like, you're never going to get it 100% right first time round. I don't think I was at the first event. I came to the Winter Ball last year, and apart from being like incredibly tired, because I think I've been like doing the circuit the whole day beforehand, and I don't think I actually have black tie, if I'm honest, so that was a challenge. But yeah, like, I mean, the quality of people in the room was exactly as you say. It was very high caliber. I think everyone was enjoying themselves. You know, it was a great location, and I think it's also something slightly different, right? In the sense that most of the events that are focused on the kind of VC ecosystem tend to follow relatively similar formats. Like, it's a pitch event with like 100 people, pizza, wine, whatever. And what I tended to find with a lot of those events is, well, yeah, okay, you go there, but like of the 100 people attending, like 60% of them were, well, they were like me, service providers, right? Like, okay, I'm a service provider that isn't just a service provider, but, you know, the reality was that the majority of people there were kind of there, you know, because it was somewhere to go on a Thursday evening, right? Or because there was free pizza, or because their mate was going, so, okay, yeah, I'll tag along. And then equally what tends to happen with those sort of things is, you know, the best founders aren't necessarily doing those sort of pitch events, or the best VCs aren't necessarily attending those events. So you kind of get this kind of B list upon B list upon B list of attendees, or in fact, you know, probably even not even B list. Whereas, as you say, like, you know, I've moderated a couple of your events, or been on the panel, and the caliber and the quality of the people in the room as well as on the stage have been good, right? Like, they are people you would want to speak to for whatever reason. They are at the top of their game. They're at the top of their particular industry. Did that take work, right? Like, as I know, you know, from the podcast, like it is difficult to get attention from very busy people who are very focused on what they do for a living, right? Which is meeting founders and investing in the best founders and the best applications and technology they can find. So how did you approach that? Was it just through your existing network, or have you had to kind of work at that? Or how did you grow that side of things?
Well, actually, we're still, you know, I think we're still getting there. We're still getting to the place where we want to be. We're always improving. Some of our events don't turn out as amazing as we'd like them to.
Sure.
But we take it as a learning experience. We experiment with different pricing, different styles of platforms that we use to sell tickets, different
I think
exhibitors.
Pricing makes a difference, by the way, because like a lot of the events that I'm talking about are free. Whereas the minute you price an event, the minute you have to pay for an event, it automatically, you know, it filters out, I guess, the people that would never really wanted to come in the first place.
Yeah, I mean, sometimes we have cheap events, sometimes we have very expensive events.
Yeah.
And that's actually a good point, because when we charge, the probability of someone attending obviously goes up. And then when we charge a lot, you know, we have fewer complaints. And the people who we give free tickets to tend to complain the most. And the people we give, you know, expensive tickets to tend to appreciate it the most. So it's a really funny dynamic.
Man, I could not tell you the number. Like, the worst clients to work with are the smallest clients. Like, it's always the way. The ones that pay the least have the biggest expectations compared to what their, you know, what the reality is. But look, I mean, I think again, you know, you guys have been around for what, 2-3 years now, essentially, right? Like, to your point, it's early, right? And things will change. The ecosystem will change. We'll talk about that a little bit later on as well. But yeah, I mean, I think if you keep doing what you're doing, and I think the magic is the quality, right? Like, if you can maintain the quality of both the attendees as well as the speakers or the panelists or whoever it is, like, that's how you create great events, right? Like, no one wants to go, well, not no one wants to go, but other events are 10 a penny. So you've got to differentiate, right? Like, and the only way to differentiate in this sort of a situation is by upping the quality, right? And like just talking a bit further about community building, right, and networking as well. You know, apart from London Venture Capital Network, you're also running like an 850 person WhatsApp group for the Namibia Startup Investor Forum. What are the lessons that have influenced how you kind of approach community building at LVCN, right? Like from the WhatsApp community to LVCN, and again, just as we talked about, right, with everyone throwing startup events in London, like how can you further set yourself apart from the noise beyond the quality of the guests?
Yeah, I mean, I've learned a lot by having that community, because the reason I created that WhatsApp group is because I saw what we were doing in London with WhatsApp groups.
Yeah, Gen Z VC and all the rest of them. Yeah.
Exactly. There's various WhatsApp groups that we use in the VC community.
Yeah.
And so I thought it would be great for Namibian entrepreneurs to have a space to discuss as well. In Namibia, it's a small market. We have fewer, innovative startups, but we have a lot of SMEs and entrepreneurs.
Yeah, but 850 strong is pretty big.
Yeah, I mean, but it didn't start like that, right?
Yeah,
we started
sure,
we started with skepticism that would be relevant in the market. So I just pushed for it. I said, like, this has to be a thing. So we start small and see what happens. And we tried it. And, I have one of my friends helped me to set it up. So it's been quite interesting. And even last month in June, we hosted an event in Namibia, even though I wasn't there, right? So I've coordinated.
Feels like a bit of a missed opportunity, maybe.
Yeah, I mean, I've just kind of put together like a small executive team, and they kind of run most of the stuff, and we'll see where that goes. But what I've learned from it and what I've taken away is it's so interesting to see the way that people operate in different countries. Culture is one of the topics I always talk about, whether it's in the workplace or even for a community like this. It's so interesting to see how people, want to, take leadership or not, or how people want to connect. It's a very different landscape. People are more relaxed about it. I mean, it's such a small town. The capital city is a small.
What is the capital in Namibia?
Capital city is Windhoek.
Of course.
Population's probably around 400K. Namibia's population's around 3 million.
Yeah.
So it's a small country, but
yeah. So the country is like a third the size of London.
Yeah, something like that. Yeah. But it's 3 times bigger than the UK in terms of land size.
Yeah.
So yeah, actually, I would say I've learned a lot from LVCN and applied that to the model we have over there. It's just more of like a hobby, just to help the community, help Namibian entrepreneurs to find opportunities. For example, we discussed taking a delegation of Namibian startups to Cape Town for some of these interesting conferences going on. But I'm not sure if we'll manage, but we'll try our best, and hopefully people will appreciate that and benefit.
I mean, I think the point is, right, like, okay, let's say you attempt to have this delegation go. If it doesn't work, someone will try it again, right? And maybe it'll work that time. But I think the point is, as with everything, right, unless you give it a shot, you'll never know. And yeah, you'll come across visa problems, or you'll come across, logistics problems, or you'll come across the venue where, was not ready, or all that sort of jazz comes into play. But the reality is, like, you could sit there and say, well, okay, all of this stuff could go wrong, let's not do it. Or you could say, well, let's try and see what happens, right? And the first time, to your earlier point, you learn from what went well, what went badly. Okay, we don't need to go to the High Commissioner's residence on this occasion, or we should run the event at an incubator in Cape Town, or maybe we should go to Joburg instead, or whatever, right? Like you figure out the things that work, the things that don't work, and then you keep refining until you find the pattern that does work. Which I guess is the same with community building, right? Like you end up. Like what I find is on all of the community, yes, there are lots of VC community WhatsApp groups in the UK and London, certainly. Each of them have a different flavor, and each of them have a very different angle that they're approaching, right? And you see that come through both because of the people that are on the chats, but also because what you tend to find in these communities, right? And I see this a lot, like through my kind of family lens and my family business lens, is you're always going to have a subsect, and it's typically a very small subsect, maybe 5-10% of the community, who actually are the most vocal, the most engaged, are, you know, either asking the questions or answering the questions the most, and that then tends to set the tone for the rest of the community, right? And so I guess managing that can be interesting depending on how those characters kind of perform. But I think with LVCN as an example, right, as a community grows and grows and grows, and this comes back to that first question about that maintaining quality, is how do you keep the same vibe and feel? Because like one of the things that I've certainly noticed about LVCN is that like there is and this is not meant negatively, there is a student-esque vibe to it, right? Like there is this sort of passion and real kind of belief in what you're doing, which I think, especially when you're younger, comes through a lot more than like jaded, annoying, you know, quasi 50-year-olds like me. But obviously as the thing matures and as it grows, like you can lose some of that. So I guess, you know, the question I guess I'd ask you is like, how can you keep it fresh? And you know, will you continue to draw on maybe, you know, King's College as a recruitment ground for either volunteers or for, you know, for employees down the track? Like, how do you see that going? Because to me, it feels like you have the potential to create a platform for student-led entry into VC, right? Like there are tons of VC programs out there, right? You and I both know, included Diversity, you know, Newton program, all the rest of them. But it feels like you're really like trying to aim at that very early entrant into the ecosystem. Is that fair to say?
I would say initially when we began, we had more of a focus on students. Since then, we've really matured in our target demographic, so we don't really focus on students, although we do have a couple of events focused on students.
Yeah, I'm less the events themselves, but like
even talent wise, we still want to include students because our goal is access to VC.
Yeah,
right?
exactly.
And one of the groups that's interested in VC is students.
Yeah. As
such, we've created an event just for students. So in January next year, we're going to have a student-focused event around tech and VC. On top of that, we have the London VC Fellowship, which trains you know, young professionals and students to break into VC. We find the most passionate people possible and give them the tools they need, right?
What are those tools? What do you think is the most critical?
We go through all the basics that you would need. So due diligence, deal sourcing. The fellows have to create their own deal memos, investment memos that they've sourced from real companies and present it. And this is not something to take lightly. So we really vet our candidates, and we've had hundreds and hundreds and hundreds and hundreds of applicants always trying to get in. And we, you know, because we're not able to accept everyone, we launched our boot camp, which we held last week. So that's one example of us trying to make it more accessible for students, because it's not accessible. You know, the knowledge is not accessible. So another thing we've done is we've started planning an online course. So if anyone's interested, feel free to register interest on our website.
We'll be putting links in the show notes. But I mean, like, to that point, right? Like, do you get a feel for like the people applying or taking your courses or your fellowships, etc.? Do you get the impression that they are people looking to break into venture as a profession, or are they more kind of just interested in, to your point, what are the tools? How's the thinking? Like, how do you network? How do you kind of build relationships within the space? Like, you know, is it, you know, I'm someone that wants to raise a fund. Like, okay, what do I do? Or is it more, I'm curious about this whole industry and how it works, and therefore I want to kind of get a bit more knowledge around that?
So in our vetting, we try and get the people who are most passionate about VC. In that journey of the fellowship, a lot of people get a harsh reality check. And VC might not be what they expect. You know, they come in very excited about VC, and we give them all the harsh truths straight up. We don't hold back. So because of that, some people decide, actually, you know what, maybe VC is not for me. I'll go for private equity because I want to get paid way more money. Or some people want to go for the startup route because, they feel that that's what they need to do at that stage of their career, which is fine. Yeah. Either way, I think it's just helpful for people to know the information and to build that community, because one of the biggest value adds is having a community of very, very impressive, like-minded peers.
Yeah, of course.
Right. So yeah, it's kind of up to the applicants what they end up doing. We try and place them in our VC partner firms.
Yeah, got it.
And so if they have an opening, it's really much more easy for them to get a job than if they're just in the open market where they don't know anyone. If we are your advocate, then it's just so much easier to get a job.
And this goes back to kind of one of the points that you made right at the beginning, which is access to the ecosystem is opaque, right? Like it's always been gate kept. It is difficult, because, there are a limited number of firms, there are a limited number of positions available. There are, VC firms are not necessarily like hiring at a VC firm is a function of their AUM, right? Which changes every 5 years, not every year, right? So, a firm may only have 3 positions available today, let's say, and it may be 5 years before they have another position that comes up, right? And again, okay, people move on and they can change and whatever, but I think one of the challenges that I found when I came to the UK and started getting interested in venture was, it was less of a challenge for me, but because of, frankly, my brazen lack of any kind of shame, I'm more than happy to kind of ping someone on LinkedIn and say, hey, listen, can we have a chat, or come on the podcast or whatever, right? But I think for a lot of people, what I imagine to be the case is like they struggle with that whole, how do I even break through that first conversation? And so what are the tools that you like, what would you recommend? I mean, apart from obviously taking the fellowship or doing the course, clearly, but what would be your kind of one thing that you recommend? And then from your own experience, like what makes a difference?
Yeah, so I read this in an article somewhere or in a newsletter or something. So it's not originally my view. Sure. But there are 3 main archetypes that, work in VC. Yep. There's the researcher, yep, or the analyst, someone who does a lot of research, understands topics, goes very deep into the market research, yep, and prepares reports, prepares materials that you can review. And so those kinds of people share those materials and they can get into VC like that. That's one way to get into VC.
Yeah, so actually do the work, do the research,
send that, share deals with investors. That's a great way to do it. Yeah. Another way is just through networking, building communities. Mm-hmm. So if you're a community builder, you get to know the right people and you go into the right rooms and right spaces.
So this is the second archetype.
Yes, the second. Yeah. So the community builder is someone who has great social skills, and this might not be everyone, right? So some people who are good at researching don't have that social bug. Yeah. Right. And the third one is just to start investing. The third archetype is just
be an
investor, right? Yeah. So you go out there, you build a syndicate, you find investors and you get them on board and convince them, hey, this deal's really impressive. You should invest. And so I know people who've done that and started working in VC afterwards, right? There are tools that let you do that. I wouldn't say cheaply, but it's fairly within grasp. Exactly.
Which I'm an investor in, Carter, or what used to be Vauban.
In the US, AngelList.
An AngelList in the US, yeah, exactly. And now, obviously, Seedrs and CrowdCube and various others are out there. But I think what's really interesting there is I remember someone saying to me, I can't remember who this was for the life of me, but essentially if you want to become like a partner or if you want to be like an investor, you need to be good at one of 2 things. You either need to be good at finding deals or you need to be good at raising capital, right? Which is a combination of the community builder and the investor, right? Like those are the 2 things that you need to be good at. And obviously if you're an emerging manager, for example, you need to be good at all of it because like you're the only person doing it. But obviously as you progress and as your firm grows, you may find yourself naturally fitting into kind of one of those categories. But I guess that then leads to the point, right? So if you are trying to break into venture, and you're one of those three archetypes, again, depending on which of those archetypes you are, the challenge is which firm has the availability, has the room, if I can put it that way.
Look, exactly, right. So that's actually when I worked in VC, I just kind of did a mixture of those things.
Yeah.
And by mixing it up, that's how I was able to actually get into VC.
Yeah.
So I was good at the networking side. I was good at the research side. If you go to my, I've put together blogs, I've put together investment memos that I shared with investors.
Yeah.
And I learned a lot by doing that, right? So one of the investors that comes to mind frequently to me, that I think about a lot, told me I would never invest into this business that I sent to him. And I was always wondering, like, why would he not invest into this company? But, upon reflection and after working in VC, it's so obvious why not? Yeah. Why not, right?
Yeah.
And that's the kind of insight that's really hard to get.
And I'm guessing the why not was market not big enough, not scalable enough, or...
It was just like a consumer tech business that was very hard to build and scale, right? And I wouldn't have really known that unless I had that work experience in VC. But because I was, sharing so many deals, and some of them were really excellent, I was actually, given an opportunity. So that's really cool.
Yeah. No, I think the message, I guess, is, as with everything, right? Like, you got to make your own future, right? Like, you have agency. If this is something what you want to do, you can't be passive. Like, this isn't it, like VC investing or venture in general, right? Whether you're on the startup side or on the investor side, it's an active industry, right? Like, you have to do stuff. Like, it won't just happen, right?
It's like the number one industry for networking, right? So if you like networking,
I mean, why do you think I'm here? Like this is literally, it was like, oh, okay, I'm good at this stuff. I think I'll just, I'll stick with this ecosystem. Yeah. I don't think this would work if I was still in like manufacturing. Like I'm not sure I was.
It's a different vibe.
It's a bit different. I don't quite have the engineer's mentality, but
the thing that I tell people is do all the things. So you have to do all the things.
Yeah, you still got to be good at all of it. Yeah.
You got to be tweeting. You got to be doing your LinkedIn posts. You got to be writing blogs. You got to be sending deals to investors. You got to be going to the events. You got to be, reading TechCrunch every morning to know what's news. You need to be doing all of it. Maybe not, but that's my view. You never know where the opportunity is going to come from.
You got to be trying to do all of it. Like, a couple of guests that are going to come on later this year, on this podcast, reached out on Twitter and asked them, and they were like, yeah, cool, right? You just don't know where that opportunity is going to come from. LinkedIn tends to be kind of where everyone in the UK is. So like, that's a good place to, if you're in the UK and Europe, I would say more generally, it's a good place to kind of crack in. Whereas US tends to be on X. But equally, I think one of the most important things, and one of the challenges, I think, with the advent of LLMs and AI, and certainly on a couple of the VC chats I'm on, this has come up a couple of times, is like, there is a risk that people start outsourcing their thinking to the AI, but actually writing, outsourcing memo writing to the AI. But actually, the act of writing is how you build your conviction, and is how you think through the problem and the opportunity in front of you. And so I would say actually the most important thing is to write, right? Like, to really, really kind of hone your skills at writing about why this worked, why this didn't work, or talking about it, like, certainly, but writing, I think, is a discipline that too many people ignore, because to me, there is a direct line, and correlation between how you write and how you think. And if you can write well and hone your thinking, and, like, to your point, learn about why you're wrong and why things change, right? So to your point around the consumer tech business, like, okay, yes, you thought it was a great deal. Then you understood after conversation or whatever, or having worked in the industry, you understood why it wouldn't have necessarily been a great deal, right? And that then informs your thinking for the next time around. And it, again, like, it's muscle memory, right? So I would say, like, irrespective of the channel that you use, write. Like, I think that would be my core message, I think, is like, if you want to get into venture, right. But on top of that, yes, you got to network, you got to build relationships, because you ultimately, right? Unless you are a Sequoia, unless you're an index, like founders aren't going to come to you. You're going to have to muscle your way into getting an allocation. You are going to have to figure out how to build network relationships, but also trust and, recognition, if I can put it that way, that, okay, this is someone valuable to have on my cap table beyond the money. And therefore, therefore I will allow them to invest in my round. So yeah, I mean, but I 100% agree. You got to do the stuff first. Otherwise, if you're just sitting around saying, well, I can't get a job, I've applied like 600 times. Well,
you just got to make it happen. It's really tough. And to your point, thinking is writing.
Yeah.
And writing is thinking.
Yeah, exactly.
So if, I'm so glad I finished my master's degree before ChatGPT became a thing, right? If I hadn't, there would always be that question mark like, oh, did they just use AI to do whatever 100%. They're doing?
I'm writing a book, like it's 100,000 words long, and like there is no AI in the writing. But I'm sure I will get challenged on it, like for sure. I mean, there's AI in like how I've structured the writing, like, or in terms of like the frameworks, but the actual writing and the ideas and the thinking has all been me. But equally on top of that, like the other thing I was just going to say is in today's world, especially, right, where you are competing against the global population, right? It's not even a local population. I get really frustrated when I see posts on LinkedIn saying I applied to like 150 jobs on LinkedIn and this is outside of venture and I don't even get a response. I'm like, yeah, but that's because there are 6,000 other people applying for that same job. Your ability to stand out is not your ability to push a button. Your ability to stand out is to go and do something, like write the letter to the HR manager or the hiring manager, or like, showcase something you've done that is relevant. Like that's how you get in the room.
You know what? Like I got some really good advice once. I spoke to one of the MDs at an investment bank, right?
Yeah.
And so at the time I was exploring investment banking because some VCs told me, hey, it would be easy to get into VC if you did investment banking.
Sure.
And when I told the managing director about this, he said, if you want to get into VC, just focus on VC. I mean, that sounds very straightforward, but to me at the time, I really didn't know what to do with my career.
Sure.
And, working in investment banking, what he said is that investment banking is its own skill set that is completely different from VC, and it's not complementary necessarily.
Well, certainly at the early stage, it's completely contradictory, right?
Exactly. So it's a completely different mindset that you develop, and you don't need, that experience to get into VC. If you want VC, just go for VC.
Yeah.
And that
you'll
really
learn how to model, maybe, but yeah.
Yeah. I mean, it just gave me confidence to try, right?
Yeah. Yeah. Look, I mean, again, we could talk about this for a very long time. There are people think of finance as kind of this homogenous thing, but like if you're in credit, that's a very different thing to if you're in equities. If you're in equities, that's different from private equity, which is different from venture, which is a subset of private equity, et cetera, et cetera. If you're a family office, right? Like all of these things, or a real estate investor, like, yes, the goal is to make money, but actually the approach and how you think about things and how you evaluate a deal are very, very different, right? Like how do you evaluate, I know, the last guest I had in here, invest in energy tech. How do you evaluate like a very early stage university spin out battery tech business versus a, 150-year-old oil and gas business that has been listed for the last century, right? Like they are just very, very different disciplines, and you need different thinking. And I think the problem is that because people assume that, okay, if I get into this part of finance, I can get into that part of finance, what they end up finding is that they have to recycle their career from day one. Like if their intention was to get into venture, they may end up doing like 10 years in IB or 5 years in IB, and then starting from scratch going into venture. So yeah, I fully agree. I wanted to kind of move on a little bit because like the venture landscape is changing, right? You and I have talked about this. And it's evolving, right? Firms are experimenting, they're moving away from classic playbooks. So within that framework, like how do you adjust LVCN's approach and especially the training programs to kind of those shifts? What do you see that is clearly working in venture right now and what just isn't working anymore? And I guess the other part of this is like you've been involved in, several startups as well as within venture itself. So should aspiring investors prioritize kind of the startup experience or jump straight into VC? Because I think that's the other dynamic that certainly in Europe is still a challenge, right? And I remember speaking to Fred Destin about this, and he was like, they're different disciplines, right? You can be a great startup operator. That doesn't necessarily mean you're going to be a great investor, and of course vice versa, right? So I mean, there's quite a few questions within that, but yeah, where do you see the landscape evolving? How do you evolve LVCN's approach, and then where do you think it's more valuable to kind of kick off in a startup or go straight into the investing route?
Yeah, I mean, the venture ecosystem, the venture model is broken, at least in the UK, and that's the common theme that I'm hearing across the industry, right? The 2 in 20 model, traditional VC structure, is very tough. It's just very tough, especially if you're an emerging manager, and that's why I'm seeing so many emerging managers give up. Unfortunately, it's very
either not raising their first fund or just stopping after they have.
So it's very tough out there. It's one of the most risky asset classes. It's one of the hardest asset classes to succeed in. And as things change in venture, we always keep LVCN up to date. So we have a research and publications team that kind of assesses the industry and make sure that we're covering the latest, greatest information. We feature really incredible pieces of research, whether they're written by Bohurst or BVCA or other entities in the space. In our events, we try and keep it trendy. So we look at what's the current trend, right? So last year it was all Gen AI, and this year it's all agentic AI. I mean, whatever, like it's the same difference. But yeah, people always ask us to stay up to date. Right now we're seeing a lot of movement towards secondaries, a lot of interest in secondaries. I mean, a couple of years ago, we were talking about secondaries, and we've been involved in several secondaries. And also right now, another big topic is stablecoins. But the real thing that I've noticed is a lot of our VC partner firms are getting experimental with how they invest. Some of them are trying, mixing debt in there. They're mixing debt. Some of them are working with IP as a differentiator, which is allowing them to inject unique patents into companies and then using that as a way to gauge if one of those companies is going to be really successful or not, because they've got this very unique...
So it's IP transfer.
They have this IP transfer model, right? And then based on that, they can invest into the more successful businesses. I mean, that's a really cool model. Can share more about that later. So yeah, in terms of our education, we always bring in really great speakers who know, what the latest trends are, and we try and keep people updated on those. Same thing with our publications. And yeah, it's a very rapidly evolving industry. So, one day you're talking about metaverse, 15-minute grocery delivery. I know you like to use that one a lot. And the next day you're talking about Gen AI, agentic AI. So it's always changing.
I mean, look, obviously by its very nature, the VC ecosystem evolves, right? Because technologies evolve, themes evolve. I think the evolution of the model is definitely the thing that is probably less talked about, but also getting harder and harder to unpick exactly kind of where it's going to head. We had Irena Spatsapan on last week, and she was talking about the fact that lots of VCs, or potentially lots of VCs, are still hiding behind power law, whilst not delivering any DPI, any cash back to their LPs, to their investors. And that model breaks itself, right? Because if you can't return cash back to your LPs, to your investors, then they're not going to recycle back into either your fund or anyone else's, right? Because if they're not seeing returns, why invest? So you got to figure out how do you create liquidity while still striving to get those kind of fund returning performers into the portfolio as well. So I think there's a lot of stuff that's happening, because the reality is, 5 years ago, you could IPO, you could find a home via a trade sale, that's just become a lot harder. And then the point around like startup experience versus straight into VC. I mean, you've had the startup experiences as well. Where do you land on that?
So statistically, it doesn't actually make an impact. It doesn't matter if you have worked in a startup or not. However, it is very good.
I think there's a difference between working versus founding a startup as well, though. And
Probably.
I think that's the differentiation that a lot of people make is like, it's one thing to be the founder of or very senior early on versus like, okay, you joined as, sales director or VP of sales in like a Series B or Series C scale up. Like
this is true
it's
as well.
there's
different dynamics at play, but who says that? I mean, you never know what kind of startup you're going to join, right?
Yeah,
so some startups you might join and they're completely disorganized and they don't know what they're doing and then they collapse. And then the person goes into a VC and says, look, I have this scrappy startup experience. Yeah, but did you actually do anything? Or did you actually learn something relevant? And that might not be the case. It does give you a certain perspective. So a lot of our fellows end up going to startups because they feel that it's something valuable for them.
Sure.
Some people don't feel like they need that experience, and that's fine as well.
Yeah.
But I think I've read statistics about the performance of fund managers who have worked in startups versus who haven't, and technically it doesn't make a difference. But as a storyteller, something that helps you to sell your fund to LPs, it definitely plays a role.
Yeah, and bear in mind, like 62% of US funds were founded by ex-operators versus like 8% in Europe. So Europe is much more kind of from the money manager, finance kind of traditional background. So I look at it from the perspective of, I think working in a startup, in a fast growth startup, does give you insight into what works, what doesn't, what sort of good leadership looks like, what bad leadership looks like, what good process looks like, et cetera. And I think you can build some muscle memory, but the problem is like if you've got an N of 1, right? Like if you've been in one startup, that's all you've seen. Maybe that isn't enough, right? Maybe you need to have been in 2 or 3 or 4, right?
Yeah, I mean, when you're a VC, you're looking at hundreds of deals. So who's to say that's not as good as working in one startup, right?
Yeah. Well, yeah. So the difference is obviously the depth that you go into, right? But equally, the other thing is, I think if you come from an operator background, like, and I've said this on this podcast many times, like the challenge that I face is because I come from an operator and a finance background, like my default is what do the numbers tell me? But actually, if you're an early stage investor, you've got to look beyond the numbers and you've got to be able to abstract away to, okay, what is this going to look like in 5 years, 7 years, 10 years, right? Like when I need to return funds back to my LPs, and can it achieve the sort of breakout success I'm looking for versus, well, the spreadsheet tells me that, you're going to run out of cash in 6 months and actually, it doesn't look profitable today. Like that attitude towards investing won't cut it. And so for me, like where I have done early stage investing, I've had to like train myself out of that mentality. So yeah, no, look, I think that's a fair response. I think it very much depends both on where you were in the startup, what startup you were, and like what you're investing in, right? Like I think if you are, one of the themes that we're seeing arise more and more is like not the death of, but a move away from generalist VCs. So a
100%.
lot of like specialist VCs now as opposed to kind of generalists. And therefore, like if you've been an operator in a very, very specialist environment, then yes, I think that can be valuable, right? But equally, like if you are a sector expert in that particular field, then whether you've been in a startup or not, maybe less relevant. And then, I mean, this is something you and I have talked about before as well, but there's a huge amount of, I don't know if you call them horror stories, but certainly, there is always chatter and, certainly the sifted articles, represent it in one way, and others will represent it in another. But culture at VC firms, a bit like investment banking, I guess, to that extent, like high pressure and poor management, potentially lack of mentorship. Like, what was your own experience like? And I guess, how does that shape then the culture you talked about, kind of the culture you're trying to build at LVCN? How does it shape the culture at LVCN as well?
Yeah, I mean, culture in the workplace is really important. in a very globalized city like London, I've kind of learned to try and understand where people are coming from in terms of their, personal culture as well, because that informs the way they operate in the business, in the workplace. So yeah, in terms of my experience, I had an interesting experience. I remember like one of the people who worked at a firm I was associated with resigned and didn't end up getting their holiday pay, right? So it's really interesting to see a lot of VC firms having, work issues that, go public in the news. It's really unfortunate because the founders are depending on those investors. The employees are depending on those investors, and it leaves a bad taste in everyone's mouth.
Yeah.
When those kind of things happen. But yeah, I've seen countless stories of investors, like co-GPs splitting up, but not only GPs, also founders, right?
Yeah, of course.
So it's such a high pressure environment. And sometimes people they don't find the right person that works with them. So, or maybe people are very complicated, to work with someone that closely for that long period of time. It's very tough. So for example, someone was asking me last week, hey, should I take this program where I can get paid to work on my startup, or should I take a co-founder position at this other guy's startup, but we've only known each other for 6 months and they seem to have some good traction? I personally felt that it would be better to take it easy and build your startup slowly but surely.
Yeah.
And then find a co-founder more intentionally than just jump in to another startup where you don't know the person that well, because anything can happen, and it's so unfortunate when it happens, and I really feel for those kinds of entrepreneurs in that situation.
The reality, like the statistics are very, very clear, right? Like, so firstly, and again, it's a refrain on this podcast, like the average VC founder relationship can last longer than the average UK marriage. So, you're going to be with this person 7-10 years plus. And, most startup, like one of the most common causes for startup failure is co-founder fallout, right? And because that messes up the cap table, or, essentially, you have one wanting to drive it in one direction, the other one to drive it in another. And like that just leads to lack of strategic direction, and everything else falls apart underneath it. I mean, like in your example, I would fully agree, right? Like I think jumping into a relationship is never a good idea. I've had that situation myself. I think you have to you have to spend the time understanding who the individual is that you're going to work with, understand not only their personality, but like how complementary are they to your skill set and to your own to your own way of doing things. And what I always thought, like any co-founders that I advise, right, I will always say to them, look, I mean, whatever shit you've got going on, keep that behind doors. Like whatever you present publicly to your investors, to anyone else, to your team, like you have to present a united front, even if you're disagreeing about it behind it. Like once you decide, like, okay, this is the direction we're going to go, you've just got to grin and bear it, right? And do it that way. But having seen kind of co-founder breakups, yeah, it's tough. And this is why, like we always say, if you don't have a shareholders agreement in place or like a co-founder agreement, like go get one like immediately, because it can wreak like just real havoc, right?
Yeah, no, exactly. So always unfortunate to see. And yeah, I mean, we just support the founders and the investors the best way we can.
And so how do you think all of that kind of informs how you're building LVCN?
So in LVCN, we want to have a culture of good vibes, right? So the family office I'm at, the owner of the family office told me about some of his corporate work experiences back in the past, and how, he just kind of wants to live a life of good vibes. And I just kind of always remember that quote. So
I mean, it's a lot easier when you go to a family office, but yeah,
I mean,
I agree.
Yeah. So for me, I was just like, wow, like I just want to take that quote and stick it up in every room, and whoever I'm working with, I just need to feel that experience of good vibes. Of course, that's not how life works, but
but if you have it as like your guiding principle, then okay, yes, you're gonna have tough times, you're gonna have like disagreements, you're gonna have stuff, right? But the point is, if like the overarching direction is let's feel good about what we're doing, let's enjoy what we're doing, because that's what I read into like good vibes. Let's like, if I'm not enjoying this, then I shouldn't be doing this, right?
Exactly,
Like
exactly.
That's the way I would read that.
Yeah, no, we love what we're doing, and we have so much fun doing it. We laugh about so many things every day, and we just have a great time, bring together the best people, and have huge impact. So to me, that's good vibes, and I hope we could just continue that in perpetuity. So that's kind of how we think about the culture that we're building at LVCN.
Yeah. No, I mean, look, I mean, as an advisor, like I'm incredibly excited to be along for the journey. I think you guys have like a huge amount of potential opportunities in front of you. And you know, because I've said this to you many times, like figuring out which one to tackle first and well, and all the rest of this is stuff that, you kind of learn as you go. But, it's been incredible watching what you guys created over the last 2-3 years. And I'm sure it's going to continue to grow from there. Just as we wrap up, a couple of kind of questions. What is one thing that you have a contrarian conviction about from any area of life, whether that's work, politics, socially, or at home?
I'm not sure if this is that contrarian or
Sure.
not, but I would just say that basically you can do whatever you want to do. Mm-hmm. A lot of people say, oh yeah, you have to do this first before you do that, or you have to do this in that way. And I just don't really care anymore. And I just really disagree. But maybe
it took me 20 years to get to that.
Yeah.
To that realization. Yeah.
Yeah. I think a lot of people feel that they have to do certain things because of XYZ reason, but I just really don't care. And I think that people can just, if you want to be an investor, like just go and be an investor, make it happen. If you want to, I actually met the founder of Boom Aerospace, the supersonic jets that they're building in Colorado. Very incredible startup. And his background wasn't in that. His background was like, I think he worked at a big tech company and he just decided like, I want to do this. I want to build like supersonic jets. And to me, that was so inspiring, right? And I was so excited to see him in real life. Wow, this is the person who, went from, working in a regular type of job to doing something next level. Those are the kind of people.
When's he coming to speak at a LVCN event?
As soon as the jet's ready, he'll be over. No, I don't know. I'll ask him. And
but what you're talking about is agency, right? Like I think too many people default to
excuses.
Yeah, excuses like I can't do it because, right? Or well, no one's going to hire me, so I won't. Or I can't, I'm not going to attempt this because I could fail. And look, I get it. Like lots of people don't have necessarily a risk-taking attitude, but I fully agree. Like I think everyone has agency to go out and be or do what they want to do, or be who they want to be. And I agree. I get very frustrated with people that kind of like, oh, I can't because. Like I think you can talk, and it's a bit like investing, right? You can figure out 100 reasons why not. You've just got to find the one reason why, right? Like you got to find the one reason why this is the bet you want to take. And then you got to take the bet, right? And yes, you got to live by the consequences of that, of course, right? But that's what having agency means. So yeah, no, I don't know how contrarian it is, but yeah, I would fully agree. And finally, so we can get to know the real you, what is something that moves you the most emotionally?
I've asked a couple of people what my answer to this question should be, because I was really not sure.
Yeah.
But I think just having an impact and helping entrepreneurs to achieve their dreams, it's so important to me. Something I've always been interested in and I've always taken pride in doing. And so over the years, I've been a connector, I've been an investor, I've been a founder, I've been a supporter. And yeah, like, if anyone has questions, they want to reach out with a specific question, they can reach me on Minect, where I have like it's like a platform where you can kind of ask me a question or book a call. And I try and I put the price as low as possible. I think the lowest is $10.
What's it called?
Minect.
Minect. Send me the details. We'll make sure we'll put it in the show notes. Yeah, look, I mean, this has been a great conversation. I really enjoyed, really enjoyed exploring some of this stuff. So beyond Minect, for our audience, where can they find you online? You're on LinkedIn, you're on Twitter, where are you?
Best place is LinkedIn, but Twitter is also fine. Yeah.
Amazing. Well, Dan, thank you so much for joining me. It's been an absolute pleasure.
Thanks for having me.